Good morning, folks. We'll probably just wait a couple more minutes and then we'll get going because we know that there is so much that we want to cover. And with our fingers crossed, we'll have time for questions and answers. Dominique, do you have a preferred moment when we start? Do we want to just give it another minute and then we'll get going?
Yeah, let's wait until 11:05 and then do your strike while everyone's time. Let's get started.
Fabulous. I'm hoping that folks got the email that what we sent last night that had the spreadsheet. And if you didn't receive it, you may want to check in your spam folder. I know that I frequently end up in people's spam folders, unfortunately. So if you didn't get the email from last night, please take a look for it. For those of you who may have not been on the original sign-up list, we'll be sending things after the fact as well.
And if you want to put your email in the chat, if you didn't get it, we can, are you able to send it out, Robin?
Dominique, would you be able to do that? That would be great.
Okay.
Oh, we will.
Just because we'll be using it when we're doing the budgeting training. So for some people, it might be easy to have it open on their computers as well.
Great. Well, given that it's 11:05 and that we want to use people's time as effectively as possible, I think we should probably just get going. There are, just so you know, potentially up to 45 people that might be attending this workshop, but realistically, I think we're probably expecting about 15 or 16. So with that said, welcome to Taming the Fiscal Beast, How to Master Fear and Loathing in Financial Management. Meredith Smith and I, Robin Carton, will be facilitating this. For those of you all who we've seen in prior workshops on financial management, lovely to see you all again. I recognize some of you all already. And for those of you all we may be meeting for the first time, we are delighted to make your acquaintance. For some reason, our
pictures disappeared. Sorry about that.
So we apologize for that. But Meredith, if you want to take a minute to introduce yourself.
Yeah, my name is Meredith. I'm a CPA and principal of Streamline Accounting Strategies, and our firm works specifically with nonprofits around accounting, management, accounting services, bookkeeping, setting up accounting systems. And I've been doing that for a very long time. So lots of experience with nonprofits and financial reporting, budgeting, management.
And I'm Robin Carton. I'm the principal of Kayak Consulting Group. I am a recovering lawyer. I was the co-director of a foundation for 18 years, during which time I got to work on a nationwide basis with fairly small organizations engaged in social justice work. And after doing that for that period of time and knowing that as a funder, you have some ethical considerations around power, I wanted to work more directly with folks. And so since 2013, I've been working with small to medium-sized organizations that are still doing the kind of social justice work I was interested in funding. And now we look at strategic planning, budgeting, personnel management, fundraising, everybody's favorite, along with a host of other things. With that said, we're ready to jump in. Ordinarily, we would do lots of intro work with everybody and get a sense of you all as well, but I'm a little concerned that we're going to have too many people and not enough time to do what you're really here for. So we're going to hop right in. Meredith?
Oh, sorry, Robin. So we're just going to quickly look at what we covered in our previous trainings. We did print training last spring. That was sort of like the level 1 of this, and then we're diving into a little more stuff that people are interested in covering in a second training. So in the last training, and I'm sure we'll offer this again at some point, we went over board responsibilities, did a quick tutorial on 990s audits and reviews, talked about what GAAP is, and talked about the difference between cash and accrual accounting. And then what we'll cover today is we're going to just do a quick review of that previous material, and then we're going to look at the statement of activities, and then we're going to do an introduction to budgeting. And the reason why we're going to look at the statement of activities, which many of you might also know as the profit and loss statement or the P&L or the income statement, is that's really the basis for creating your budget. And we're not going to really think about cash or accrual today. We're going to just do everything as if it's on a cash basis. For those of you who have more experience, that can be another training in the future. So that's what we're going to cover today.
A few things that we want to remind you about is this is an overview. It's not going to answer every single question you have. You are probably going to leave with more questions than you came in with, and that's okay. But remember, you can ask questions. Preferably if you can put them in the chat, that would be really helpful. To where you might be in your mind as soon as possible. Those things that we can't get to, we like to follow up with folks after we do a workshop, and we'll have whoops. Okay, we're back to recording. So the one thing that I want to remind everybody of, because this is very much a part of my bailiwick, is about board of directors. And that your board, I don't know how many of you here are board members as opposed to people who have to work with their board members, but the board of directors has a fiduciary responsibility to make sure that what you have is used in conjunction with what your mission is and the intent of your donors, so that it is ultimately on the board's plate to have that kind of financial oversight. And a lot of boards don't do that. And when they don't, it creates a major problem if anything goes wrong. So that for the board, their role is that they have to understand your financial statements. Members don't know how to read it. Meredith, can you change the slide, please? If board members don't know how to, oh, you've missed one, to read it, that creates a problem in and of itself. So they need to know what it means to be a tax exempt organization, what has to get filed, your IRS filings, your state filings, and they need to think about, based on your financial statements, what your risks are and how to manage them. So that was a quick and dirty overview of what we usually do in an hour and a half around board governance. But the bottom line is the board is where the buck stops. And if your board doesn't understand how to read your financial statements, including how to think about what your budget means, there's a problem. Meredith?
Yep. So I just wanted to add on to what Robin said. So what we kind of covered in the last training was understanding the financial statements and the obligations of the tax exempt organization. Risk management, budgeting is a big part of risk management, and that's what we're going to focus on today. It's not the only part of risk management, but we're sort of going on to this third bullet today in our training, and budgeting is a big part of that. So we also did some coverage in terms of what your, so going back to the prior slide, there's understanding the obligations of your tax exempt status. So this is just a slide that I find is really handy for people that you can use as a reference, but it shows you what you need to file. If you're a nonprofit and you're only based in Massachusetts, it walks you through what your obligations are to, for in terms of tax returns. So in Massachusetts, a lot of you know that you have to file a Form PC, but you also need to do reviewed or audited financial statements depending on what your revenue is for the year. And then with the IRS, you always have to file a 990. And again, these are the revenue limits for each of those filings. So this is sort of to give you a sense, because everybody always has a lot of questions about audits and reviews and when those happen and why they need to get done. And this is just a quick slide as a reference for what's required in the Commonwealth of Massachusetts and then what's required by the IRS. So you get this slide as part of the packet that we send you after the training. Another thing is a lot of people hear about something called GAAP, which is the kind of reporting you need to do. So if you're at the point where you need to have reviewed financial statements or audited financial statements, which is required by the Commonwealth of Massachusetts, those statements have to be done on a GAAP basis. IRS does not require a GAAP basis. So GAAP stands for Generally Accepted Accounting Principles. And basically what this is, it's a system to ensure that financial reporting is transparent and consistent from one organization to another. So every organization in Massachusetts that has a financial statement review or an audit, they all have to follow GAAP. And that means somebody can look at a financial statement for nonprofit group A and another financial statement for nonprofit group B and know that they're speaking the same language and they're coming up with their numbers and their balances in the same way. And then the last review slide from our last training is just a list of the basic financial statements that are required for GAAP. So we usually only look, most organizations are very focused on their statement of activities, which is the profit and loss statement, because you want to know how much came in and how much you spent. But there's also some standard financial statements that are required by GAAP, and it's a good idea for boards and staff to understand these, that when you get GAAP-based financial statements or a funder wants GAAP-based financial statements, you know what they're talking about. So the list is statement of financial position, also known as your balance sheet, the statement of activities, also known as your income statement, the statement of functional expenses. So these are just your expenses broken out between general admin, fundraising, and then program. Because when you report to the IRS on your 990, you need to be able to show like that you have that you're spending money on program. Funders also want to look at your 990 and say, like, you know, they sort of have this rule of thumb, functional expenses, like how much are you spending on programs. That's something you need to think about. We're not going to talk about that today. It's something you can do as part of your budgeting process. We're not going to get that deep into budgeting today. And then the statement of cash flows, which just shows, you know, how much you started with, how you used it, you know, what came in, what went out, and then the cash you end up with. So we do another whole training just on reading financial statements. And then, so today we're going to really focus on the statement of activities, which is also known as the profit and loss statement, the P&L, or the income statement. Robin, are you going to cover this part, or is this mine? I can't remember.
I'm on for a little bit from now, for examples. You're on for this and the next bit.
Okay, so the statement of activities is basically, we call it the foundation for creating your annual budget. So what that means is you can take your statement of activities from last year or the year before and say, okay, this is this is what it was last year. We can just roll this forward because our organization is pretty stable. We do the same things from year to year. So let's start with last year's statement of activities. So let's take a look at the Excel budget template that we sent to you. Hopefully most of you have it, but I'll share it on my screen. I just have to get out of PowerPoint and into stop the slideshow, and I'm going to share my screen. So can you guys see the Excel spreadsheet on my screen?
Does it need to be bigger?
It's good.
Okay. So when we talk about the statement of activities, there's 3 sections on the statement of activities. There's revenue, expenses, and then there's a section called net assets, which most accounting software, even QuickBooks, do not include the change in net assets on your financial statements that they print. But it's an important thing to look at, and it answers a lot of questions that board members and organizations often have when I'm working on budgeting or we're looking at financial statements. So the first section is revenue. And, you know, that's pretty obvious. Robin's going to sort of go through the statement of activities, the revenue and expense sections with you.
So you guys should know what this looks like in terms of revenue. You know that some of you get government grants. You know that you go through the painful, although Lenny's ACOM tries to make it not quite as painful process of applying for foundation or corporate grants. You have major, hopefully some of you, many of you, all of you have major donors, and you define for yourself what is a major donor. For some organizations, it's anybody who gives over $100. For some organizations, it's anyone who gives over 500, 5,000. It's a self-defined level. Then you have your individual contributors, and those are folks who don't meet that major donor definition and who maybe give once or twice or hopefully even 3 times a year, and you solicit them by email, by mail, in person. And then earned income sometimes is also known as fee for service, but different ways in which, not by fundraising, you're raising money. And then there's events, house parties, those kinds of things. Does that sound familiar to you all?
Yes.
Great. So then you have your lovely expenses. And expenses are all of those things you spend money on. And I, just so you know, am giving you the lay version of all of this. And if Meredith corrects me on any of these things, she's right. So take what she says over anything I say, because she's the accountant and I'm talking about things from the layperson's point of view. But you know these kinds of expenses that you might have. You have your personnel expenses, the salaries that you pay, the taxes that you pay on those salaries, any insurance that you might provide or other kinds of benefits. You've got your professional fees that you might be paying, perhaps for an accountant, perhaps for a lawyer, consultants and subcontractors like fundraising consultants, strategic planning consultants, any honorariums or stipends that you might pay for folks. And then there's the world of things that are not necessarily related to people. Sometimes this is classified as general operating expenses. Some foundations call it non-personnel expenses. It all depends on what you call it, though, because this is about your program and your organization. But things like what you might have for advertising and marketing, anything like a brochure or an ad you take out in an ad book for a colleague's organization who's having an event, any of those kinds of things. Any dues or fees or subscriptions you might have, filing fees, Meredith, you want to take Andrew's question about indirect expenses?
Uh,
Could
In
they
the
also
chat?
be called independent indirect expenses?
Yeah, I think we're not going to talk about indirect expenses today. That's sort of a more advanced budgeting thing. So let's table that for later. And if we have time for questions and answers.
We'll come back to that.
Yeah. So basically all your expenses, whether they're direct or indirect, anything you spend money on goes in here. And the indirect versus direct, that has to do with allocating things between programs, administration, and fundraising. And we're really not going to be able to cover allocations today. So we're just talking about your straight up budget, what everything costs you.
Great. And we'll see if we can do any kind of follow-up on that.
Mm-hmm.
When we talk about subscriptions in here, it's things like if you have a subscription for QuickBooks or for Adobe or for a trade magazine that you're using or other kinds of things. But it's not just like magazine subscriptions. So it's those kinds of things.
And
Food.
I just want to clarify, like, this is just a sample chart of accounts. I mean, some people would break out that line, for software subscriptions, they'd have a line for software subscriptions. So this isn't like the be all and end all. This is just the template we're working with today. And it's very basic in terms of the expenses and revenue sources that most nonprofits would be looking at.
And that's why what we try and reinforce is your chart of accounts, your budget, your statement of activities are very personal to your organization because not everybody's the same.
And there are certain things that you need to track because you need to report for under GAAP if you're a larger organization, and you need to report it on your 990 in a certain way. So if you're a bigger organization, there are some standards you need to meet that everybody needs to meet. And so so you sort of need to temper the uniqueness of your organization with what kind of are standard requirements and expectations.
And Lisa, we see your question about in-kind and volunteer, and we'll hold that and see if we can get back to it. Mm-hmm. But just in the interest of time, I'll remind you all that these kinds of things: insurance, rent, mailing, printing and copying, any kind of repairs you have, any kind of travel you might end up doing. Sometimes travel is considered to be taking the T. Sometimes it's going by train or plane somewhere. It can include lodging. A lot of folks are doing mutual aid these days, which gets you down to this net assets part that Meredith can talk about.
So this section here is unique to nonprofit organizations. You wouldn't see this on a for-profit organization and financial statement. And basically what it is you have this thing at the end of the year. So we call this excess. So first let's start with this line right here, excess over revenues. Just gonna fill that. So this is also known as your net income or loss if it's negative, right? Or it's also known as your change in net assets. So what this means is this year, your net assets is going to change by this amount. So really great in 2022. So let me just insert. I just want to see. So this is our fiscal year 21 actual. So this is really cool. We ended up the year with an extra 16 grand, right? And we started out our beginning net assets. So this is all balance sheet stuff, but it's also important to have on your profit and loss statement. So basically what this beginning net assets is, in really simple terms, it's the cash you had in the bank with a few, accrual based, GAAP based variations, but it's the cash you had in the bank at the beginning of the year. So when you started your year in 2021, so at December 31st, if you're on a calendar fiscal year at the end of 2020, you had $56,000 in the bank. So this is a money that when you're doing your budgeting is really important to understand, as it impacts decisions that your board is going to make. Sometimes boards say you can't spend this money, sometimes they do, but it's really important to understand that this is actually part of the profit and loss statement, or the statement of activities, is this beginning net assets number and then this ending net assets number. So the ending net assets number is what you started with, the change in net assets. So we're going to call this change in net assets or net income. Robin likes to call it revenue minus expenditures. So our ending net assets is like, woohoo, we're beginning the year with $72,000. Now it might not all be cash, but we're calling it cash for now, just for simplicity's sake. Does anybody have, so the change in net assets thing is sort of a big thing. So if anybody has any questions or needs clarifications on that, if you could just put it quickly in the chat. And then we'll move on to some budgeting stuff. And I'm going to start up the slideshow again.
Can you speak to mutual aid, Meredith?
Mutual aid, yeah. So a lot of organizations, especially if you're doing, you know, your work, community-based work, there was a lot of money available for mutual aid. And the IRS has specific, and a lot of people, a lot of organizations gave money directly to people in their communities with this mutual aid money. And the IRS has specific requirements if you're going to provide mutual aid. So Robin and I have a sample mutual aid policy that we've provided to our clients. If you'd like that, we can provide that draft to you. But usually it's something the board needs to review and approve, and you need to keep records. And so this is a specific thing of providing mutual aid. So like if you're buying, a lot of people bought vanilla, you know, a lot of gift cards or grocery store cards, or helped people, you know, with heating bills or rent. And so that's what would be considered mutual aid. Any money that you're giving directly to or for the benefit of people in your community or in your constituency to help pay for day-to-day expenses.
Meredith, just a quick clarification on net assets. Where do property values fit into that?
So those are balance sheet items, and that would definitely be part of your net assets. So for simplicity today, we're just thinking of net assets as cash because we have a lot of smaller organizations here. But property values, anything that's an asset on your balance sheet, is included in this number. So when net assets is basically coming from your balance sheet, and you're looking at the assets on your balance sheet or your statement of financial position minus the liabilities on your balance sheet, and you're coming up with your beginning net, your net assets. And you know, there's a lot of other things in net assets, like restricted donations, unrestricted, you know, donor restricted money, donor unrestricted money, and that, you know, that's all sort of more in depth. So in terms of simplicity today, beginning net assets, we're just talking about what's in your bank account.
Hopefully that was helpful for you all on that.
You know, and sometimes I think I'm going wah, 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 wah. So trying to keep it pretty basic today. And if people are interested in a more in-depth training on financial statements or, you know, budgeting for, you know, programs and indirect, direct expenses, and talking about what net assets are, that's kind of for another training.
If anyone did not get what we sent, it may have been that you bounced. So if you have a different email that you think might also be helpful, please do send that along as well.
And also there's slides for a lot of the things I just talked about. I just didn't show them, but it's in the packet. So when we're going back through the slideshow, you know, we send you the PDF of the slideshow, you'll have that information. Robin, can you give me a time check?
Yes, it is 11:35. We're doing great.
Great. So we're ready to get started on budgeting. So maybe we can just do a quick Q&A if there's anything in the chat.
So in the chat was the question from Andrew about indirect expenses, which we've paused temporarily. But there's also a question about hidden assets, like in-kind donations of services or goods and volunteers. Do they or do they not appear?
Okay, well, so they're not hidden. And volunteers are not, you do not record any financial donation or anything for volunteers. For if somebody donates professional fees that you would have to go out and pay for because they have specialized training, that would get recorded as an in-kind donation. And to record an in-kind, so any kind of in-kind contribution, I'm just going to cover this really quick. You would record the value of the donated services as revenue, and then you would also record them as an expense. So the change on your profit and loss statement is zero because you're recording revenue and you're recording expense. The other thing that you might record as in-kind is if you get donated space. So you don't pay rent, but you have an office space, or you use somebody else's copy machine, but you don't pay anything for that copy machine. But if you have volunteers that are coming in and doing mailings or making phone calls, that is not recorded on your profit and loss statement as an in-kind donation. So there's two kinds of in-kind. There's in-kind services, which would be those professional fees, and there's in-kind goods, which is, let's say you do a lot of mutual aid and somebody donates, you know, $1,000 in gift cards to you to give out to, you know, your constituency. That would be an in-kind, those would be in-kind goods. Or let's say you're doing a big fundraiser and a lot of people donate to the fundraiser for a raffle. Those would be considered in-kind goods.
Other quick questions before we move on. And you don't have to stick it in the chat. You can do a quick unmute since we don't have 50 people. Law student time is potentially an in-kind service. It depends. That's the traditional lawyer's answer to everything. It depends.
For training. Oh, sorry. I'll put mine in the chat.
I was just going to quickly follow up on the law student. So if you have a, you know, we have a group of, we have a relationship with a law school where each semester a group of students takes on a project of ours. Should that be reflected in our budget, do you think?
Unless it's a really substantial benefit to your organization, you know, I wouldn't necessarily include it. Like, what would you pay if you had to pay interns? What would you pay them? You know, maybe $15 an hour, and if they're working, you know, how many hours are they working during the semester? It gets really complicated when you start like tracking all your in-kind, and it really, the rules about it are pretty specific. And there's, of course, there's GAAP rules and there's IRS rules. So, you know, there's sort of that to keep in mind. But bottom line is, if you get physical goods that have some value, I mean, you know, somebody donates food for a meeting, I wouldn't, you know, that's not substantial. But if somebody donates something substantial like goods or services, professional services, then I would record that. I'm not sure law students.
I think the only way that law students would, Meredith, if they were, for instance, from Northeastern and it was a 3-month co-op and they were there 40 hours a week for that 3 months.
No.
Not even?
No. If people are doing free internships through a school program, that's not an in-kind service.
Okay.
Although co-op is a very, given that I went to Northeastern.
Okay. So Robin.
Yeah.
We digress.
We digress. Listen to the boss.
Thank you.
So let's dive, everybody ready to dive into budgeting?
Okay,
All
so
right.
just a reminder that successful budgeting is really based on your record keeping. So the information you have from the prior year, the prior several years, so that you can look year over year at what you've been doing in your different categories. Our hope is that you all are using QuickBooks Online and not desktop. If you do not have QuickBooks Online, you can get it from TechSoup. We are a bit biased in favor of QuickBooks Online just because we think it's one of the better financial management tools, although there are lots of other ones that exist out there in the world. So what meets your needs or what meets your financial manager's requirements, great, but avoid the desktop versions.
Well, no, I think this is more like don't use Excel was sort of my, if you're
Well,
using
that too.
if you're using desktop, that's not, I just QuickBooks Online is my preference and recommendation for people. Desktop's not bad if you're using desktop and it's working for you. Don't you don't have to run out and upgrade or change. But I think the message here is to use an accounting software package, not Excel, not pieces of paper, not spreadsheets,
Not a file box or a shoebox.
not a shoebox.
The one comment about the desktop versus online. If you have a treasurer and you want your treasurer to have access to your financial statements, if it's desktop, you have to either send it to them or they have to come to you. If it's online, they can pop in and take a look. You don't have to give them edit access. And that it's a lot easier. It's easier for, it may reduce some of your costs for other.
Also, if you're working with an accountant or an accounting firm and somebody's doing your taxes, your 990 or your financial statements or or audit, it just makes that process so much easier.
I have a question about QuickBook Online. How do you get a training? Does QuickBook provides it? Because it's different. I try to go it online, but automatically I quite don't know how to do what things I used to know how to do on the desktop version, and it's different. And I didn't know how to get help, so I stopped using the online. But I agree with you, the online is, but I don't know where to get that help to learn, because it changes.
Yeah, Intuit provides trainings. You just have to go on Intuit's the company that makes QuickBooks. And there's a bunch of Facebook groups too.
We can send you also
we can send you some recommendations for training. But like I said, if you're using QuickBooks Desktop and you're happy with it and you're comfortable with it and it's working for your organization, you do not run out and change. I think the message here was like, hopefully you're using an accounting software package.
But I like the online things that people don't have to come. You can send things. It makes it a lot easier.
Yeah,
I agree with that part.
Yeah.
So
thank you.
You're welcome. And so a few more reminders and rules of thumb. So a budget is a plan. It's not set in stone. You can revise it. Sometimes people call that a course correction, but a budget is your best guess about what's going to happen in the coming year, where money is going to come from, and where you're going to spend money. And as I said before, you start with what you know, because you have historical information about what you've been spending on and where your money's been coming from. And what you want to think about, and different people like to do this differently, but you might want to start with your expenses first. You know, because they're relatively easier to predict. You have a sense of what you're going to be spending money on. Could there be emergencies or unexpected spending? Of course. With your revenue, it's a little less predictable. You know who your funders have been in the past. You know how much your individual donors have given in the past. But there's no solid guarantees. Having been a funder, I can tell you that funders are fickle. Today, we like funding everything that you do. And tomorrow, we really want to fund work looking at the impact of methane gas released by cows. And you all might laugh, but that really happened to somebody I work with. So you need to be thinking about where is all your money coming from, but knowing that it may not all come in. And in many ways, you're going to have to look at how big a cushion are you going to be able to build, so that that's realistic. We do not want pie in the sky. We don't want what's called puffing, where you say, oh, we're going to bring in $500,000 this year, even though last year we only brought in 200. That does not look good, period. And there are templates for budgeting. You can use your statement of activities as your template. You don't have to do this from scratch every year. And it may be simpler for you all to just, this is the place where, yes, it may be simpler to start using an Excel spreadsheet and then shifting from there into your software.
Okay. So start with what you know. So Robin pretty much covered this already. So we're going to switch over to our Excel sheet again. So let me stop the slideshow. And so in this circumstance, we're starting with what we know because we have our fiscal year 21 actual and we're doing our 2022 budget. Now, this is not realistic because when you're doing your 2022 budget, you're not going to have your 2021 actual, but for simplicity's sake, we're pretending that we do. So what are the things that you know that you can start with? You know, so you know what your prior year numbers were. Maybe you haven't closed fiscal 21, but you have fiscal year 2020 and it's October, and you basically know, like what your salaries and wages are going to be for the rest of the year. You know, kind of like how much you get in individual contributions at the end of the year, if that's what you're doing. If you run events, you know how much you're going to get in from a performance or a show at the end of the year. So you can actually take, if this was like September 30th, we could probably put in some estimates, for the rest of the year in here and come up with a final prediction for fiscal year 21. So that's the tricky part, but we're kind of pretending now that we actually know, what the whole year looks. So pretend we did that already, and this is what we think our year is going to look like at the end of the year. So what do we know already? Well, we know what our payroll costs. We know what our staffing is. So we have this tab that we put in our spreadsheet for personnel. So in personnel, we have 5 people on staff. The executive director gets paid, you can say $50 an hour. You can have just the annual salary amount in here, however it works for you. But what we're trying to get at here is, this is our annual salary. Let's say you are gonna, I'm gonna put a new row in here. Let's say new hire. Our hope is to have a new hire. Oh, shoot, what did I do? Sorry. We're gonna have a new hire. Sorry, I keep hitting the wrong keys. Okay, new hire. And let's say that person is just going to be an intern. They're going to be $15 an hour and they're going to work 10 hours a week. So their annual, and we're going to say intern. And let's say they're only going to work for 6 months. So this is based, there's a formula in here that's multiplying it by 52 weeks. So we're going to just say they're just going to work 6 months for 26 weeks. they're weekly. Now we've added this new hire in here. So, but we know, so start with what you know. So the biggest expense is usually payroll. So start with your personnel. We've estimated taxes at about 12%. So this is your Social Security tax for your organization, whatever your state unemployment tax is. If you're in Massachusetts, you're paying, you know, you might be paying the PFML tax for your employees, or maybe they're paying it.
Could you say what that is, please?
Paid Family Medical Leave Act in Massachusetts, you now need to contribute for every employee that you have. If your organization is a certain size, has a certain number of employees or subcontractors, and you can choose to pay that for on behalf of the employee, or depending on the size of your organization, you can share the cost with your employee, or the employee can pay 100% if you're a smaller organization. I don't remember all the rules, but the taxes. So taxes here, the taxes are the Social Security and Medicare that employer, ER means employer share. So that's 7.65%. Your state unemployment, that's for that you pay to the DOA, and it's often called SUTA. That depends on what your, you know, that's based on a formula, and it's a rate that's specific to your organization. So like if you laid off a whole lot of people last year, your rate's going to be high this year. So that, you know, we usually estimate that at about 3%, right? But it could be as high as 7%. It just totally depends on your organization. And then there's the PFML in Massachusetts, and we've estimated that at about 2%. So these are just estimates, but we sort of wanted to get a good tax number in here. If your rates are different, you'll want to calculate this on a different level. And again, this is really sort of grossly simplified, but it's a good place to start. And if you need to get more detail or more in the weeds, you know, we can definitely do that. But just you need to take into account what the employer share of taxes are. So what you pay because you have employees who get W-2 income. So then we come up with this total. And then some of you might provide health insurance or dental benefits. So you would want to figure out what this is on an annualized basis. For this example, they have only full-time employees get the health insurance benefit, and it's an expense reimbursement plan. So they get reimbursed for up to $600 a month. So it's very predictable, because it's not a health insurance premium that they're paying to like Harvard Community Health Plan that's going to go up 10% every year. It's a pretty fixed amount that they can just provide to their employee. So this is starting with what you know, again. So we're going to go back into—
Hey, Meredith,
yeah.
Before you hop there, can you define what's considered full-time these days?
It depends.
It's organizationally dependent. Some people define it as 40 hours. Some people define it as 30 hours. It's very specific to you and your personnel policies.
Right. And then there's tons of personnel stuff. Like we could spend 10 days doing a training on personnel and HR, and it can get very complex. You know,
the short answer is it's organizationally dependent.
Right. And that's why, so one of those policies you need to have in place is a personnel policy that defines all of that stuff for your organization and for your employees. And then if I was creating a budget for your organization, the first thing I would want to do is look at your personnel policies. And if you provide health insurance to everybody on your staff, then I would make sure that was in the budget. So then we can take personnel, and then we can pop it. So we have pre-populated this. So here's our salaries and wages. So that's this number here, $273,000. right? Here's our payroll taxes, here's our health and dental. So we come up with, this is our total payroll costs.
Meredith, can you say what pre-populated means, please?
Oh, well, I just sort of created a separate spreadsheet where I went in and, so for the training, I put these numbers in here already. That's all. It means I put them in before the training, pre-training. So then, you know, the next thing you know is so we're going to do personnel costs first because those are your biggest expense. Some of you have occupancy expenses that are really high. The sample organization doesn't. But as you can see, we sort of organize. So this is your chart of accounts represented in a statement of activities or profit and loss statement. So we have put the biggest expenses first. So we've put all your payroll costs at the top because those are your most expensive. That's what you spend the most money on unless you're a 100% volunteer organization, which I know some of you probably are. Then your other personnel expenses and another big cost, we put that here. If you have really big occupancy costs like rent and utilities, you know, you run a facility, then we would probably want to break out your occupancy costs as a separate subcategory here. Right now, we just have like rent and utilities down in this bottom part. So let's look at, so we also know like other personnel costs. Okay, we know, so we have this tab professional fees. So I've gone ahead and said, okay, this year we know our tax 990 is we're gonna pay $5,000 for that. We pay $5,000 every year, it never changes. But let's say this year we know we're gonna have an audit or a financial statement review because we've hit that we're gonna have $250,000 in revenue, and now for the state we need to have a financial statement review. So we're going to change this to $10,000, and you could just put a note in here, like you can notes in here. You can say, you know, 10K because revenue is more than 200,000. All right. We have a fundraising consultant. We have a contract with them. We know they're going to charge us $10,000 this year. They're going to do some specific targeted fundraising. Or maybe they just meet with us and coach us on fundraising. We need to have IT support. We outsource that. Everybody's working remotely and we have like 20 computers and they're all over the place. So we need IT support. And we don't really have any legal issues. We don't expect to have any legal issues, but maybe we should just put a little money in here, you know, for legal in case something comes up. And then, you know, you can keep adding rows to this. You know, if you have more, you know, if you're going to have other, you know, other costs related to this. Then we take that $23,000 and we add that in here. So consultants, this is a little confusing. You know, a subcontractor would be, I don't even know like what you would put in here. I would, you know, everything should either go in. You know, if it's like not a professional, it's not a professional who's doing something for you. It's somebody who's just coming in and doing like a one-off project. You hired somebody maybe to do your website. You might want to put that in here. You can add more specific lines in here if you want, but we're trying to keep it really simple. And then we have honorariums and stipends. So basically what you want to get in here, anybody you're going to have to potentially issue a 1099 to. So they're doing work for you, non-employee work for which you're paying them $600 or more per year, or could potentially be making that. So honorariums and stipends, you know, if you have a conference and you have speakers come, you put honorariums in here. If you have an advisory board of people who are doing a project, or you have youth that are doing specific things for you and you give them stipends, you would put that in here if you're a youth organization. So then we get total other personnel expenses in here. So consultants and subcontractors, you can go over to, you can create new tabs, or you can go to professional fees and you can just say, we're going to do professional fees, and then we're going to do subcontractors. And then, so like, let's say you have somebody who does your cleaning, they website upgrade, you know, and then you have stipends, you know, youth volunteers, speaker fees, you know, that kind of stuff. And you can start filling in numbers in here. So let's say, you know, we pay, I don't know, $200 a month to get our office cleaned, and our website upgrade is going to cost us $3,000. And we have 10 youth volunteers, and they get $100 stipend. That's $1,000. And we're going to do, you know, we're going to do a conference, and we're going to have 5 speakers, and we're going to give them $1,000 each, you know, something like that. And then you can add these numbers up. I'm pretending you all know how to use Excel.
Meredith, there's a question about the $600 cap and what you were referring to there.
So that's another tax and compliance question. So if you pay anyone for services and you pay them and they're not incorporated. So if you have somebody who comes and does your cleaning every week and they don't work for a cleaning company, it's an individual person who does your cleaning for you, you should be getting what's called a Form W-9 from them. And then at the end of the year, you should be giving them a 1099 form reporting to them and to the IRS how much money you paid them if it's $600 or more. So if you have youth volunteers, once you pay them stipends of $600 or more total in a year, you need to report that and give them a 1099 form. So we often suggest to people that if you have youth volunteers, you hire people in the community to do things for you, try to keep that amount that you're paying them as a stipend or an honorarium under $600 a year. So these 5 speakers that you're paying $1,000 each of these people, you would, before you pay them, a W-9 form from them, and then at the end of the year, you need to issue them a 1099 form showing that you paid them $1,000 to speak at your conference. And
Meredith, would you call that an honorarium rather than a stipend?
Yeah, yes. So these are stipends, and so we're trying to just be, trying to be really generic. What you don't want to have on your budget or your Tri-North accounts is like hundreds of lines. You want to try to summarize stuff and then have like sort of backup documents with this with all the detail of where those numbers came from. Because if you do it right here on the budget, you're going to end up with something with hundreds of lines. It's going to be impossible to figure out what's going on, and it's going to not be super helpful.
And every foundation you give that budget to will hate you. Yeah. So the difference between an honorarium and a stipend is, and Meredith, you can correct me if I'm wrong, is generally an honorarium is a one-time payment for something like giving a workshop, being a speaker, those kinds of things. A stipend is repetitive. Right. It's for someone who's coming to your organization like a youth who's enrolled in one of your programs on a weekly basis, and you're paying them $15 a week for their involvement.
Yeah, and maybe that's to help them with their transportation costs, to get to the program, or maybe, if they didn't come to the program, they would have to have a job after school. So you're providing them with the money so that they can afford to participate in your program and they can come every week. That's more of a stipend, is more of a recurring thing, and an honorarium is like, hey, thanks for honoring us with your presence and your expertise and speaking at our conference. We really appreciate it. And here's $1,000, for you or your organization. Now, if that honorarium of $1,000, you give it to another organization, you don't give it directly to a person, then you don't have to do the 1099 form. But this is all compliance stuff. Again, it's kind of part of another training. So I'm sorry to keep saying that. But we have a lot to get through, and we only have another half an hour left. So I'd kind of like to keep going. So we're sort of, this is where we're filling in like predictable. So you want to really start with your expenses and your predictable expenses. You're using historical records. And then we're going to go through. So here's all our other stuff. Like let's say we know that our advertising and marketing, for some reason, it was really high last year, but this year we're going to just say like $1,000 because we don't really do any advert. Or maybe you put a couple of ads in an ad book for an event. That's the kind of stuff you would put in here. Bank and investment fees, usually like if you're paying bank charges, you're paying credit card fees for, you know, processing donations, all of that. So sometimes I just call it bank and credit card charges. Some of you, hopefully none of you, but some of you may pay a monthly maintenance fee on your bank account. That would go in here. Filing fees is really easy. I mean, this is just like you have to file an annual report with the Secretary of State every year. That would go in here. If you have to register your organization with anyone, that would go in here. If you do multi-state, and we're not going to even talk about that now, but if you're a multi-state, you do fundraising in multiple states and you have to do charitable registration in multiple states, that would go in here. You have a payroll service that's running your payroll for you every couple of weeks or every week. Those fees would go in here. Robin already talked about subscription. So we pretty much know, like, none of this is going to change for us this year, right? So we're just going to drop in last year's numbers. And then, you know, food costs, the same thing, insurance, furniture and equipment, like insurance expenses. So what goes in here is directors and officers insurance, workers' comp, which you have to have if you have employees, you know, liability, general liability insurance if you have an office space or you run a program. And then you would just, so again, you can do the detail. You could have a separate sheet and you could just say, okay, this is going to be 1,000, this is going to be 500, and this is going to be 1,000. So let's say, oh, look, this year it's just going to be $2,500. Furniture and equipment. We're not going to talk about assets right now, but if you're going to buy anything, you know, like last year, you had to get everybody new computers. So you spent, and everybody got new computers and a desk and a chair, and you spent $6,000. But this year, maybe you're going to have one new employee and you need to get the office furniture and equipment for them. So that's $1,000 this year. Supplies and materials. So this is office supplies, program supplies, anything that you need to do what you do. You know, stuff that you need to get. And then, you know, postage and delivery, like we don't send mail anymore. Maybe we go to the post office a couple of times a year, so we're really not going to spend any money on that. Printing and copying, everything's digital. You know, maybe we're going to run some flyers for something that we're going to hand out in the neighborhood. You know, we hired a bunch of new employees last year, and we're having new employees, so we really want to do some professional development this year, so we're going to beef that up. Our rent isn't going to change. We really don't expect anything on repairs and maintenance. Our telephone and internet's not going to change. We're not going to do any traveling this year because, you know, it's still COVID and we're locked down, and so we're going to do everything virtually. But maybe we want to put a little bit of money in for transportation and parking if people have to like go run errands or get reimbursed for something. Our utilities aren't going to change, but you know, we're just going to make it a round number because we like round numbers in our budget. So we're going to round it up a little bit. And so that's our total, right, of non-personnel. So we've already calculated all these totals in here. So and mutual aid, let's just say mutual aid, we're only going to spend it if we get it. So we're not going to budget for it. You know, so maybe we will end up spending some money here, but only if somebody gives us money. So we're not going to put that in this budget. So those are sort of how we do our predictable expenses. And I know so then the next step, if anybody, does anybody have any question about expenses? Because that's like a big piece. Are there any questions in the chat, Robin?
We've got them all.
Okay. So then the next step 2 is you want to do your predictable sources of cash and revenue. So what do I mean by cash? First, you want to plug in this beginning net assets number, right? So we had, at the end of last year, we had an excess of revenue over expenses of 16,000. We started with 56,000 and we ended with 72. So we know that this year we're starting with $72,000 because it's what we ended with last year. So we're going to plug that in first because we know that's cash that we have in the bank that we can spend, right? And, you know, maybe some of it's donor restricted. We're not going to talk about that right now. Just pretend it's all general operating money. You get to spend it on whatever you want. So that's money that you have in the bank. So first we're going to plug that in. And then there's a couple of other things you can think about here, but then we want to go up here and say, okay, sources of revenue. So we're going to go, is this your part, Robin?
That's fine. Yes.
So we're going to go look at, we're going to go do an income breakdown.
So when you guys know, when you're thinking about where money's coming from, you have a plan every year for who you're going to apply to for grants. And you know what happened last year or the year before or the year before that. So you can make a pretty good guesstimate of what you're going to apply for. The total amount, though, that you're applying for in foundations is a hope. So then when you're translating your hope to your budget, think about which of these are slam dunks, which of them you're 75% confident in, and which of them are below 50% for your confidence. When you're putting your realistic expectation in your budget, you want it to be those folks who you think you have a better than 50% chance of getting funded. Government grants. So the list is entire under foundations, but the translation to your budget is only the ones that you think you have a 50% or greater chance of getting. Your government grants, you know where you've been funded before, you know where you may hope to apply, you know that if you ask for certain, like a housing grant from HUD, you have a 7% chance of getting it, you're still going to try. Would I put that money in the budget as being hopeful? No. It exists in your planning, but do you want to bank on it? No. So this is your planning sheet.
Can I interject on government grants too?
Yes, please.
So a lot of government grants too are based on the government's fiscal year. So if it's a federal grant, their fiscal year ends on September 30th. If it's a state grant, it's June 30th. So sometimes if you're a calendar year organization, you'll be going into next year knowing that you have this state grant, you know, maybe it's reimbursable, so you have to spend the money and they pay you back. But you know that you can include that in your budget because you know that you have that funding for 6 months. Or if it's a federal grant, you have that budget for, you know, funding for 9 more months.
Then you know how much you've gotten in the past from your major donors, and you realistically think about, will you be able to get that much again in this current year? Has anything changed for any of your major donors? Have they retired, lost their job? The market crashed and they lost their savings. What is it that might affect how much you're bringing in, and how do you think about that to make a realistic expectation? Your individual donors, the ones you solicit perhaps 3 times a year. By the way, there was an article recently that said you could solicit 22 times a year and it wouldn't necessarily harm you. I don't buy that, but 3 times a year, absolutely. And how much did you get from individual donors in your spring appeal, in your early fall appeal, in your end of the year appeal? Spontaneous individual givers, will they spontaneously give again? Any kind of house party or fundraiser that you might do, what's your track record been like in the past? What is reasonable to expect in the current year? Meredith, can you roll down, please? And then fee for service or earned income. Do you know, if you're a childcare center, you know that you have fees that parents are paying for your services.
Or an after-school program.
Or an after-school program. And so then you're looking at, with your best hopes, the total income, but then you have to think about my realistic hopes. What will those numbers look like? So this is your target for what you're getting, but you know that you may be applying to 10 different foundations, but your likelihood of being funded is only 4 or 5 of them. And so that will be reflected in what shifts over from your income breakdown to your budget itself. Does that make sense? Any questions? Onward.
So can I just ask?
Oh, sorry, sure.
Thanks. So you're saying that the money on this tab will be greater than what you transfer to your budget, because on this tab it's more aspirational, and then you'll have a different. Okay, thanks.
So you could have 2 columns here. One, which is the aspirational column, and the second one, which is the confidence column.
Thank you.
Yep. Well, it's not. Yeah.
Yeah, it would be something like this.
Yeah.
Because you, because you want to have a record of like, where did these numbers come from, right? So, and we're just doing a general income breakdown, but you could have, let's say you have a lot of fee for service, or you have, 100 funders, or you have a major pledge, sustainer program. You could have separate income, you could have separate tabs in here for each of those. So you could have a separate tab that is,
Well, for instance, under individual donors,
yeah.
you could have under, not even a separate tab, but
Or you could just have a list of, donor name.
I wouldn't even go there. That's what your donor database is for.
Yeah, so hopefully you have a donor database and you're not doing this in Excel. So you can run some reports from your donor database. But let's
if
say
you go
you
back
have,
to the, don't even go there, Meredith. If you go back to, please don't do that. If you go to the income breakdown, the fundraiser speaks. Under individual donors, you might have sustainers / pledges. You might have the amount that you expect to get from appeals. You might have one-time gifts.
yeah, you might have like
under there.
spring appeal, fall appeal.
I wouldn't even go that far in a breakdown. I would just call it appeals, donor appeals. I would call it sustainers or pledges. And one-time gifts.
And then maybe website.
Although website, in
Or
the fundraising world, we often just call that an individual donor.
Okay, all right. So you could put in, and then you would have a total here. So let's say this is like, 30,000.
It just gave you a date.
I know. I can fix that.
We can fix this stuff later, just because we're running out of time.
Yep. So then
We'll
I'm
send
gonna
you a lovely clean sheet.
Then I'm going to plug in all of my numbers here, and I'm going to come up with 339,000. So this is what I think is going to happen. This is what I think we're going to get for revenue. This is pretty sure what our expenses are going to be. So then we can roll down to the bottom and we like, oh my gosh, you know, we're going to run a deficit of $74,000. Well, you know, we can't, you know, nobody's going to approve that because we're going to end up with negative, right? So the goal here is, so let's say I goofed on my income breakdown, and let's say, oh, right, I remember this foundation's going to give us 250,000 just for, or say it's 100,000. Oh, sorry. Let's say, no, 100, 1, 2, 3. Okay, there we go. So now our revenue has gone up. You know, pretend I type that number in here into foundations. So now we're running a deficit. We have a little deficit, right? But we have all this money that we carried over from last year. This is our cushion. And remember, we are hiring in our personnel. We want to hire, we have this new hire, and we want to bring in an intern for 6 months. So that intern, that's pretty much our deficit, is that intern for $4,368. But we really want that intern. So can we say to the board, hey, you know, we have this surplus from last year. We really want to hire this intern. We think this intern's going to like really help us get this new program off the ground and get stuff organized around this new program that we want to do, and help us do some planning around that. Or we're hiring an intern to help us run our 2 fundraising events. And if we don't have this intern, we can't run the fundraising events. And maybe this intern will help us bring in an extra $5,000 and pay for their, but we don't know. So it's okay to have a deficit budget if you can afford it. And that's the thing that organizations, they get really panicked when they do this and this number is negative, right? So this is why this beginning net assets, ending net assets thing is really, really important. Because maybe you did an awesome fundraising appeal last year and all this money came in and everybody was giving you money because of, you know, COVID and, you know, Black Lives Matter and, you know, all the stuff that's been going on in the world, and the stock market was doing really great because Trump was still president and everybody was just sending you money, right? So you ended up with all this money. So you can decide as an organization with your board, let's say, you know, the board, so you can use this net assets, these cash, to fund future things if you need to. You could also say, hey, look, I think, you know, we need to go back to our development team or our board fundraising committee or a development consultant and say, look, we need to bring in more money next year. We really need a better plan. Like, you know, what can we be aspirational about how much money we're bringing in? Because we really want to end the year with a cushion, because we really want to launch this new program, you know, in 2023.
One of the things to think about, if you can go to the bottom, Meredith,
Yep.
is that when you're putting your budget into funders, as you all know, they have a shock reaction if they see anything that's a negative number. But you counter that by putting a note that says we are using some of our net assets that were intended, that have been board approved to cover this small deficit amount, or whatever the deficit amount is. Or you can say we have received an award in the prior year, that the money is going to come in the current year, because you're not going to confuse them with accrual concepts. But you just explain that deficit number, and then usually that.
Or last year we got a grant for $5,000 to hire an intern and we didn't use it, so we're using it this year.
Right. So the explanation really takes away funder panic or board panic about that little red number.
And also, if you make sure you can, include your beginning and your ending net assets in here. Or let's just call it what it is. I mean, with beginning cash ending, because this is a cash basis budget, because we're not doing accrual right now. So this is all just what money, cash that's coming in, cash that's going out. So,
And if you have a week to sit down sometimes, then we'll talk more about accrual. So.
all right, I'm gonna go back to
asset-
I'm gonna go back to the slideshow. Sorry, I gotta.
So the question was, do funders have a shock reaction to seeing assets that nonprofits have, especially when you're applying for small grants? A unsophisticated funder might, but funders should understand that the goal isn't for you to have nothing. The goal is to ensure that you have at the very least some kind of rainy day fund, so that if you didn't have a penny that came in for 4 or 5 months for some disaster reason, you'll still be able to continue. If you're a $200,000 organization and you have a $2 million endowment, yes, that should raise a lot of eyebrows, and hopefully your board would be questioning why that was so as well. I hope that answered that question.
So we
We
So
have
one of the
5
things-
minutes, Meredith.
Yep. What? Did you say something, Robin?
I said we have 5 minutes left.
So plan for future expenses, staffing changes, we put in that intern, program initiatives. Maybe you're not going to do it next year, but you want to plan for it the following year. If you need to move, we talked about those equipment or furniture purchases, the new hire. You also need to plan for future revenue. So this is really, Robin talked a lot about this, and this is sort of the cushion thing that we're talking about. You not only need to plan for future increases in revenue, can you increase your revenue, grant funding, donor outreach campaign, but also economic changes. I mean, we all know what we've been going through the last few years, and nobody could have predicted or planned for that. And organizations that really had good systems in place for, donor outreach, fundraising, and had, some cushion in the bank, probably got through the last few years better than some, organizations that did. And I know a lot of you, what the struggles you've been through. Oh, so all my photos got stripped from this. So that bottom line, I did the sample of the deficit budget. So, we have a slide in here about managing deficit budgets. It's pretty much stuff that we just talked about.
So here's the recap in short form. Make sure you have adequate records that you can rely on. Remember that as you're putting this together for your budget, it's not fixed in stone. It's a plan. It's a guidance for you.
Sorry.
And you're going to use the budget you create and compare it to your actual revenue and expenses every month, so that you can see where you are during the course of the year, and in the event that you need to do a course correction. And the hope is that in some way, shape, or form, you're able to build in a cushion so that you don't find yourself in dire fiscal straits at the end of the year or at any point during the course of your year. With that, it really brings us to the end of today's presentation, basically just about right on time. Who knew? And so what we hope is that in these last couple of minutes, folks might just kind of pop up and say one thing that they learned that was really helpful and one thing they'd like to know more about, to the best that we can during the course of the last few minutes that we've got. Anybody can feel free to pop in. And you can be off mute for this. You don't have to type it.
So is there a percent for net assets that's reasonable? No, it so depends on your organization. Some people have endowments, some people have a lot of donor restricted funds that, let's say somebody gave you $1 million to for a specific purpose, and you're spending 10,000 of that a year because that purpose is a long-term purpose, and so you're going to have $1 million that you can't spend because it's restricted by the donor. So that's a whole other thing to take into consideration. If you're a small organization and you mostly have cash, I mean, it's just smart to have like 6 months of operating cash, on hand in your net assets as unrestricted net assets, because if something goes wrong and you need to keep running your programs, and let's say most of your money comes in at the end of the year, you need enough, you're on a calendar year basis, December 31st, you get a huge ton of money comes in right at the end of the year. That's going to be in your net assets going into next year, but you need that to be able to operate, for the first 6 months of next year. I mean, that budget we looked at was just an annual budget, but if most of that revenue is coming in, you got to spend money evenly throughout the year, and all that money is going to come in at the end of the year. You need to have that surplus in order to keep your organization going. So much of it just depends on your organization, what your fiscal year is, how you're set up, how your money comes in.
I was going to say, that's the thing I've learned in this seminar, to feel comfortable showing a net assets number.
Mhm.
Great.
I felt like intellectually it made sense. I want to have it, and yet I was scared to put it on a budget.
Yes, yeah, you need to use, that's the message you got from today. I'm happy about that, because I really wanted to be clear about that.
So we're actually out of time. If you want, we could spend another 5 minutes on the sort of future tripping about things that you would like to learn so that Dominique can take those away, or you could put all of that in your evaluations and give that response to her, because the goal obviously is to think about not just what you need to know, but what you want to know to make that happen. So let's do it this way, because I want to value everybody's time. I know you all are busy and you probably have people waiting for you as we speak. Let's do this via the evaluation process, and when Dominique gives you the evaluations, if you could just list things that you want to know, then also we can send you some resources as well that might address some of those things. Sound good?
Like the mutual aid policy we said we were going to send.
Yes. So thanks everybody for coming. It was great having you here. The questions that were able to get answered, I'm glad we were able to be there for that. And we hope to see you again at a future workshop training, and do feel free to drop us a note if you would like to have a couple extra questions answered, because we can do that for you.
Yep.
All right.
Thanks so much, everyone.
Thank you very much.
Thank
Have
you.
a great day.
Bye.
Bye.